The broadcast is now starting. All attendees are in listen-only mode.
Hello everyone and welcome. I'm just starting a little bit early to do a sound check. We're still about 5 minutes away from actually going, but if you can hear me okay, please let me know. And looks like sound is good, and let me know where you're tuning in from as well. We have Wayne all the way from Houston. That's awesome, Wayne. Great to have you with us. And Ken is with us just north of me here in the Brooks area from Lethbridge, Alberta, where I'm from. And we have Margaret with us from Apache Junction. Great to have you with us, Margaret, our world traveler now. Sandy says sound is good, and all the way from Florida. Audrey's with us from Mesa. That's awesome. Rob is with us from the London, UK, and Pat from Toronto, and we have another Richard from UK, Anglesey from UK, Bob from Parksville, off of Vancouver Island. Gee, what a great turnout, and I want to thank you so much for joining us. I was asking earlier how people are sort of coping with the pullback, the big drawdown days. Friday was probably the biggest one, and had a few responses to that. And by the way, Harry's with us from Southend, the UK, and Derek said we've got an extra dimension to the pullback here in the UK, and Harry commented on that as well. And he said the pound rose in advance of the time leaving the EU to 1.32 against the US dollar. Not quite the 240 that it was when I visited Stratford, Ontario. Oh gosh, yeah, big changes there, and it's contributing a little bit to the uncertainty in the marketplace as well, but there's other factors at play. Yeah, Peter said Friday was a drastic pullback, especially for those with significant investment in triple ETFs, so you got to be really cautious there. And Laura says, just wondering how people are managing their stocks that they've been in for the long term. She's still in Apple and Microsoft, and her cost basis is very low, so she doesn't want to take profit only to get in at a higher price. So just if anybody has any comments about that, I asked her if she is doing options, and she does dabble in options, but she doesn't like covered calls. So Laura, you'll want to tune in next month for the International Forum. We'll have Tom Colley of Ontario explaining the covered calls to us and hopefully taking some risk off on that. So tune in for that one. That'll be a real fun one. Okay. So, and Laura says she was into shop at 56 US. So that's pretty fantastic. Yeah, and you don't want to give too much back, but at the same time, you've got a winner, and she said she's at a zero. Her cost base is covered, so that's all good. Kamel is with us from Vietnam, visiting over there, and that's awesome. Thank you for joining us. I've got to scroll down now a little bit, and we're getting close to the bell time, so we'll soon be starting officially here, but did want to welcome everybody and ask what everybody's doing. Andre from Quebec says sound is good, and Stephen from Cloudland in Georgia. Christine, our Burlington, Ontario user group leader, says loved your essay this weekend and looking forward to a great morning. That's awesome. Ken said he's doing put protection, so doing some puts, and probably Ken on the individual stocks if they're Canadian, maybe on the SPY if it's US. You can do more of a some protection with the SPY or the SPX as a basket rather than individual stocks. In Canada, I tend to find I have to do individual stocks for the put protection. But thank you, Michael says, enjoying our awesome preview to spring. Yeah, we've had some beautiful weather here in southern Alberta, and Michael's just up the road in High River. So. And he says the chart's looking good for the days ahead. I guess the weather charts more than the stock charts, Michael. uh, Peter says selling when his triggers are activated. So that's great to hear. Selling on the stops. And Jane says, thanks to VectorVest, I'm okay. That's great to hear as well. And Jurgen says, Corona virus cost them, well, a couple of thousand. So that's not good. Eric says, got in on the eHealth windfall last Friday and made 45% in 11 days. And actually, I'm going to show some of those stocks, Eric. I got in on one as well, but there were a few others that really zoomed up. So I'll show those as we get going. So listen, there's more questions coming in, and I hope we get back to this discussion because it's such a good one to hear what everybody's doing in this sort of pullback in the market. Tim says TD was broken down most of yesterday for me. Yeah, that was really bad timing for TD to be down pretty much all day. I had some stops in on a few holdings I have on the TD site, and it was interesting to see if they triggered as they should have, despite being down. But anyway. And Dawn says substantial move to cash when the buy-sell ratio went negative so quickly. There were some big down days with the buy-sell ratio, and so Dawn was reacting to that. Yeah, Jurgen, I don't know whose fault it was. It may have been TD's fault, and you always blame the provider, but I'm sure there were other forces at work. All right. Well, listen, I want to welcome everybody. We're broadcasting on our YouTube channel, the VectorVest YouTube channel as well. One thing for everybody to know is that if you want to get the replay earlier than my own email that'll go out probably tomorrow with the slides, I send out an email with the slides. You can always go to the YouTube channel, and I'll give you that website in a minute, but go to the VectorVest YouTube channel. We're broadcasting it live there, live streaming it, and then it's available shortly after the broadcast for the replay. So welcome everyone. Again, it's Stan Heller. I'll be your presenter today, and I'm the consultant for VectorVest Canada. It's my pleasure to host these events, and we're really pleased to have Dr. Ed Subak with us again from Florida on thematic ETFs. A tremendous opportunity with so many great new ETFs coming out, and it's a pleasure to have Ed come back and tell us what's available now and how to trade them, and then I'll kind of cover off a little bit on the graph setups that I like for it as well. So questions and comments, this is our chat box. Just type your question in here if you're new to GoToWebinar. Questions and comments, click on the send button. This should collapse on you during the broadcast, so it'll give you more screen space, and you left click on the orange arrow, and then we go from there. Thank you, Jerome, for your kind comment, and Mary, welcome from Iowa. Great to see. We were really close to the capacity on our registrations this time, so want to thank everybody for coming out. That's pretty fantastic. And those of you that are able to attend live, either with us on the webinar or on, I know we've got a lot of folks probably watching on the YouTube channel as well. It's great to have you live, but if you can't attend live, always make sure you register, and that way you'll get the slides and the replay. And just a quick risk disclaimer, there is risk in investing, and we've certainly seen that this past week. And everything you'll see in here today is provided for educational purposes only, should never be considered as investment advice. The information is designed to empower you to make your own investment decisions, and these decisions are yours and yours alone to make. And that's the VectorVest disclaimer there. Purpose of our monthly forums, we want to further your knowledge of the VectorVest system. That's really what our user groups, whether you're attending a live user group meeting or here on the webinar, that's the main goal. It's always to focus on VectorVest and how it can help you make money in the market. Share current ideas and strategies for making money and protecting wealth. We want to create opportunities to interact and share ideas with other members, ask your questions, and that's what we've been doing already this morning. Whew, and I just looked over to make sure I was recording, and I am. Oh, I have gone through a webinar in the past where I forgot to push the record button, so it's going. And then promote the meetings and activities of our VectorVest user groups. You always want to make sure that you know where to access the user group meeting list, and if you live in an area, how to just you're welcome to join any meeting and take advantage of that opportunity, and provide a forum for those VectorVest investors who do not live near a user group community. All right, so this is our agenda. We'll start with the market review. Quite a bit of detail there, so I'm going to move along fairly quickly, and then we'll talk about thematic investing and our best graph setups. And then this is at the bottom of the screen is the address for our YouTube channel, VectorVest YouTube. It's right there, so you can grab onto that. All right, or just search on VectorVest YouTube channel, works well too. So our color guard reports, very different than they were on January 4th, our last international forum, where everything was green. We had most countries were up double digits. Even Hong Kong, that had kind of a tough year last year, ended the year up about 10%. But after a good start in January, there's been a lot of pullback in just about every country. Australia seems to be weathering the storm fairly well, still up 6% year to date. So these are now year to date numbers up at the top. In Canada, we're holding on to a gain of 1.32. Notice in every case, the color guard is bearish. VectorVest does not advocate buying any stocks at this time. And that's really good advice unless you are hedging or using options to protect yourself or make money with options. It's just a good time to just manage the positions you own. Maybe even tighten your stops if you haven't already. In some cases, it's getting to the point where it's, unless you've got a stock that is really failing and the RT is really falling, for example, in Hong Kong, where the MTI is 0.70, you're getting closer to where we know the market is getting closer to the bottom, and you don't want to just start selling everything willy-nilly. That's the capitulation that we want to avoid. But for the other countries, the MTI is still relatively strong, but lots of red in the color guard. You can see it all the way across the board. Tom J is asking, should we be buying negative ETFs or contra ETFs? That's always a choice. There are some contra ETFs, both Canada, US, and all our countries that you could participate in, and some of them are certainly taking off. Study the graphs. We're going to show you some great graph layouts today. For ETFs, study the graphs, make sure the ETF is rising, make sure you know what you're buying when you're buying a contra ETF. For example, in Canada, we have contra ETFs that track the S&P 500 and the NASDAQ. And so you might think you're buying an ETF that's contra to the Canadian market, but in fact, it's contra to the US market. So just be aware always of what you're buying. So you can see the numbers here. Canada and Australia holding on gains to year to date, but the other countries have slipped back. And some of these buy-sell ratio numbers, the drop-offs were really staggering in a one-day basis. Friday, Canada, we went from 0.64 to 0.52. We've had some huge drop-offs in the buy-sell ratio in the US. On Friday, 0.43 from 0.76, but even before that, we had some big ones. There was on January 24th, 1.22 dropped all the way down to 0.75. So I think that's probably the warning sign that I think it was Don that mentioned he looked at. So it's just a time for caution right now. Kamel says tightening stops. Oh, using a type stop with ETFs and mostly into the leverages right now, the leveraged ones. All right, so this is very different than last month as well, where I showed you the year, the 2019 yearly gains, and they were all pretty much green until the last few countries. And now year to date, we're off to a very bearish start. The TQQQ was up over 16%, and it's fallen back to 8%. So that's that quick drop off with a leveraged ETF that can happen. And then you see the other countries here. It's interesting, Canada down 0.74, even though the VectorVest composite is up. So we've seen that before. Sometimes the composite outperforms the managers of this particular ETF, and even Australia, maybe a worst case scenario, down 1.68, whereas the overall market is still showing a gain right at the moment. So these are good ones to put in your watch list. It's on the US market. You can put them into your watch list, and some of these countries will certainly take off. Turkey's off to a good start, and you might find some trading opportunities there. I've had a few comments coming into the chat box. People really liked Dr. Lito's. They liked the essay in the US side on Friday, and they're asking who wrote it. And all I know is that it's a collaborative effort these days, which may be one person is assigned to write it this week and another one the next week, or they may be working on it as a team, coming up with the topic, and then somebody puts down the draft and then they work on it as a team. I'm not sure about that, but I know that Dr. DeLito, before he retired, had prepared a number of people to be writing the essays. And Michael from Ottawa, Ontario says mixed results across Almanac's first 5 days versus the month of January as a projection for the year. Yeah, it was looking like a real strong January, and then boy, since the 21st, when the coronavirus really came to fore, it's gone the other way and put those protections out. Michael says VectorVest asked me to write it. I don't think so. Well, listen, here is the market information for Canada. We'll focus on that. It's very similar across our countries. And I mentioned in my essay from a couple of weeks ago that it's most important to read the strategy section. I hope you read the essays and the overview and the timing, but if you miss all of that, you should read the strategy section. You always get some valuable insights and guidance. Here, all of our key indicators finish the week lower, and that's where we're at. You can see we've had a really nice run. We had a confirmed up call, and that's been moving. That's been a very good call again after a bit of a whipsaw earlier. So the confirmed up call has been a great signal again in Canada, but now you can see we're really turning down. I've got on here an 8-day moving average of the MTI. I've been using this for quite a few years. It's just a little smoothing out of the MTI. And when the MTI falls below the 8, I know it's a time to really become a little more cautious. We'll play a little bit more defense, maybe stop buying positions. And you can see that was happening here. And conversely, when the MTI is above the 8-day and rising, then we're in a good position for growth there. Here was another situation. Does it always work? No, because here it kind of fell and we had 2 or 3 days of downside, and then it popped right back up. So that's always the way. But you can see the buy-sell ratio, MTI, really falling. My essay from Friday, this past yesterday, I talked about the buy rating, and I mentioned the market is sometimes hard to figure out, but the buy-sell ratio has really been falling, giving us an indication that the health of the broad market is weakening, and we've seen that across all of our countries. Prudent investors should wait at least until we get a primary wave up signal in the trend column before buying stocks long. And I mentioned here your goal is to make money and make it consistently. And that means not going against the market trend and not buying stocks that are falling in price. It means selling when your stock is falling and falling some more. And so we have a guide, and that's the VectorVest Buy, Sell, Hold ratings. And I just talk a little bit about how to use them. And with the buy rating, this is important. I said the best time to step in and buy is when the rating is shifting from hold to a buy or from a sell to a buy, which is more rare. But those early buy ratings, even after a hold, can be very, very effective. And I talk about the search to find the new buys and how to go back and look for them. And I explain the sell rating and I explain the hold rating. And I mentioned in my essay, study 100 or more top relative safety VST and CI stocks on a 3-year weekly graph. Make sure you've got the buy, sell, hold ratings up at the top of the graph. And then look for stocks on a weekly graph that have very few sell ratings and put your cursor on the new buy signals right after the holds. And ask yourself, could I have made money? And I think after this exercise, you'll feel pretty good about the buy ratings. Richard, the PW stands for primary wave up. Okay. Phil, my essays are Fridays, and you can go back and review any essays. But if you go to the Views tab, and we're on January 31, so just slightly into the Views is my essay. And if you go to the Timing tab, even better, on Fridays, you can click here on the special presentation video, and the first one up is always the timing report. And a senior instructor will even read my essay. They'll read the market timing information, but more importantly, sometimes they will demonstrate what I'm talking about in the essay, and they will give us some insights on the market timing that you wouldn't necessarily get otherwise. And Barry from Halifax says, no question about the value of the new buy rating. It works. All right. And I did want to just go back a little bit. So this is the Friday, January 24th essay. So for Phil and other new folks, when you're in the views, if you want to look at another essay, just come up here to the top, change the calendar, and there's the essay. And it was all about climbing the wall of worry, just a follow up to Jim Penna's outstanding video special presentation. So just talking about, is it okay to buy, is it safe to buy stocks in the current uptrend? Where do I get the guidance? So I talked about all the guidance. I gave the historical benchmarks for the MTI and the buy-sell ratio here. This one, I think I just did the MTI. And I talked about the news. I talked about that strategy section. For example, when on the US side, they talked about the buy-sell ratio and the overbought level of 1.50 on the MTI, and concluded that these are not good signs. That was on January 24th. And then I'm going to review Dr. Lito's essay just quickly. This Dr. Lito, VectorVest essay this weekend, where they took us through all the guidance that's been coming since January 17th about the need to exercise caution. So I talked about the color guard. I talked about the benchmark levels. This is based on the emotional market cycle. And our blast off phase is when the MTI is down around 0.60 or lower. And as we get into optimism, excitement, and thrill in Canada and most of our other countries, when the MTI gets around 1.2 to 1.3, we start to get near a top, and then we want to use a little bit more caution and play defense. In the US, it's more like 1.5. Okay. David says another great information piece that Dr. DeLito gave us is the market scorecard, and that's found in the special reports. So the market scorecard is a fantastic one for sure. A user group developed that, and it still works. That was quite a few years ago. So on the US views from Friday, I really encourage you to go in and read this. Everybody has access to the US views. So this is the essay from Friday. Again, I don't know who wrote it, but it was really fantastic. walking us through the scenario of the different warning signs. Actually, it started as early as January 10th. We got an early sign there was trouble ahead. And that was based on the price of the VVC continuing to hit higher highs while the buy-sell ratio hitting lower highs. That's that bearish divergence that I showed everyone in last month's International Online Forum. It works for the market and it works for the stocks, as I demonstrated last month. All right, so January 17th, these are not good signs. January 24th, in addition to the strategy section that I mentioned earlier, this is what VectorVest had to say in the overview, the essay. So there's been a lot of information and guidance to suggest that we need to be defensive. Phil is asking, how would I find Dr. Leto's report on March 3rd, 2003? Well, again, it's in the special reports, or you could just go to the essays, right? So go to the viewers tab in the essays and move that date calendar back, all the way back. Okay, great questions, Phil. You know, we get so many different perspectives from everyone on here, and sometimes the newer subscribers ask questions that really benefit everyone because they are new. So we appreciate it. All right, and then so here is that strategy section from Friday, yesterday, and we received the confirmed down call. That was the big news, the buy-sell ratio below 1 for the whole week. And you can see again, I've got my 8-day moving average. And this is the next support level identified by VectorVest, 48.38. So there's still quite a bit of downside risk to come. And I'm suggesting it might happen early in the week. There's some things happening. And then, of course, on Tuesday evening, we get President Trump's State of the Union address. Hopefully he takes a very optimistic tone, puts things into perspective, and we can move forward with continuation of a strong market, because the earnings reports, for the most part, have been very bullish. Canada, US, and I'm sure many of the other countries as well, the earnings have been pretty rock solid for most companies. So hopefully we keep going. But here's kind of an outlook. Again, here's that level of support on a 1-year graph now that we're seeing. But then we've got the events that are affecting the markets. And often we don't talk about events affecting the market, because at the end of the day, events affect the market when events affect companies' earnings. But this is happening earlier, and it's such big news that it's happening. So we have the coronavirus. Basically, China is locked down. Flights are being canceled in and out. We have the impeachment news that should be wrapping up on Wednesday now. And again, Tuesday is the State of the Union address. And there's a few political comments coming in that I have to ignore. Interesting always, but I have to ignore them. Thank you, everyone, for those. I'll have some good reading after. And Michael from Ottawa, he's done his projecting. I believe he uses the Fibonacci, and he's looking for a pullback as well to the 38.2 level, possibly even to the 61.8. So caution is still the order of the day, folks, and it could be big on Monday and Tuesday, and then hopefully after President Trump speaks, hopefully we get back on course. But there's still these other things that are happening, a lot of geopolitical concerns, Iran and the Brexit implications, everything. All right, so and there is the VIX, and so there is a bit of a resistance level up here. And keep in mind, again, when the VIX is rising, that means the overall market is falling. There were some bullish divergences on the VIX. We noted in January as well. And here it is here, where the VIX is falling while the RT is hitting a higher low, suggesting a move up, and we did get that. And then we saw it again in more recently here in January. While the VIX was flat, the RT was rising. That's that bullish divergence. And then we've had the increase that we've had. Mario, I don't know offhand what the ETFs for copper are. My suggestion is to call our support team and find out about that. And, it's a free call. Call support. They can help you with that, or just Google it. What are ETFs for copper? So vaccine diagnostic stocks rising on spreading coronavirus. I'm sure like a lot of our members, and like me, I was, when it started happening the weekend prior to Martin Luther King Day and Tuesday, the 21st of January, we were all doing our Google searches. These are some of the headline stocks that I found. I had no idea they were going to go up like they did. And I chose the wrong one. It's not the biggest gainer, but sometimes you got to go to the news when there's a big event happening and see what stocks might be affected. And typically there will be an article or several articles, but these were the stocks that came up, vaccine and diagnostic related stocks. And NNVC, the leader here in VectorVest, you could see what was happening because we had a 9,972% volume increase right here on Tuesday, the 21st of January, right after the big news over the weekend finally was started coming out from China about the virus. And this stock took off. And the RT was already above 1. It did have some blips, but something to watch. And stochastics was above the 50, which is bullish, and on balance volume. Michael from Ottawa is going to help you out. Omar says, CPER or JJC. So CPER or JJC, copper's leading indicator. Thank you. Daniel, I found these stocks by doing a Google search. That's all I did. Could I have found them in VectorVest after the first big up day? Yes. You'll remember on the 21st of January, it was a very bearish day. The market tanked. And yet our 1-day winners and our 5-day winners were all extremely bullish, up in the double digits. And they were all up in the double digits because these stocks were found by Daily Boomer Search, by AC Price Poppers. They were up on huge volume. And so you could have found them sort of after the first day using that approach. All right, great question. Thank you, Daniel. And sorry, I think that was Daniel that asked me that one. And Brian up in Sherwood Park area says nobody is close to a vaccine yet. Yeah, that's right. The vaccine, they said, I believe I read a report, is still a year away. But some of these companies are developing those vaccines and have vaccines for the flu. And Don says you can double click on any stock to get a list of stocks. Yeah, you can get a list of stocks that are in that industry group. For example, these are all sort of in the drug, biomed industry, or certainly in the healthcare sector. All right, so I hope that's helpful. I just thought it was useful to cover that today. And then, of course, on the China stocks, the contra or inverse ETFs. And I knew I'd get the question, well, how did you find these ETFs? I just went to Google. Once I have it in Google, then I can put them in a watch list in VectorVest, which I did. And these are the China ETFs on the inverse or contra side. And from sort of Tuesday morning, the 21st. This is looking at it at the close of Friday, as all the news was coming out about the virus. But anyway, you can see the 3 times ETF up 41% from there. And then, of course, you look at the graph, and there's that bullish divergence again with the stochastics rising, RT slight rise while price on Yang was falling. So again, folks, those divergences are leading indicators. If you haven't listened to January's presentation on divergences at the International Forum, I encourage you to go back and and have a listen. All right, so just some ideas there. And listen, how long is this going to last? I don't know. You got to put in your stops, and you're only going to be using money that you can afford to lose. These are not your long-term investment types of stocks. I just want to make that very clear. Robert says, University of Wisconsin Research Lab is very close to finding a cure for coronavirus. That's awesome, Robert. Thank you for that. Chandra, I don't have any great searches for the divergences. I certainly have got some. You can create some, but they're not going to be perfect. I tend to look at the graphs. I tend to go for the new buys and then look for the graph patterns and different ways of finding them. All right, I want to move on because we've got Edward ready to go on his presentation, and it's going to be, you just don't want to miss it because there's so many new opportunities on thematic ETFs, so I want to get there as quick as I can. Our user group notices, again, you go to VectorVest Views on any Friday and then click on the user group listings in there. I've lost access to my program. Maybe I can do it this way. Let's see. Oh my goodness. Okay, there it is. All right. So again, you would just go to the Views tab on any Friday. I always tend to want to go to the most current. And then you can either scroll down or click on the drop-down menu, go to the user groups, and here's all the listings in all the countries where we have user groups. So they're kind of organized by country and then by state, etc. And again, I just can't emphasize that enough. We just had another absolutely outstanding user group meeting in Lethbridge. It's just so great to hear from other members what they're doing and what ideas they have. And then if you live in a community where you think it should be big enough to have a user group and it doesn't, here's who you would contact Kathleen and just email her at usergroups@vectorvest.com for information about starting a group. All right, any last questions before I bring in Edward? I've gone a little bit longer than usual, but I thought this was important. Well, Mary was asking, well, what is an ETF short? The ETF shorts or contra ETFs, Mario, go in the opposite direction to the index or basket of stocks that they are tracking. So, for example, TQQ, which I showed you earlier, is inverse to the NASDAQ. So if the NASDAQ is going down, sorry, no, I'm giving it the wrong way. That's not an inverse. Let's go with the Yang that I just mentioned, Yang. So when the China market is going down, falling rapidly, the Yang is going to be going up, okay? And again, call VectorVest support if you have any questions about that. Yeah, SQQQ is the inverse of TQQ. Thank you, Barry, and Glenn, and others. And by the way, HC says copper ETFs do not trade much, volumes less than 50,000. With ETFs, I'm not as concerned about volumes because they are tracking an indice. That's where the movement in price comes in, just as long as there's enough liquidity to get in and get out without a big bid-ask spread. That's the main thing on that. Oh, Richard, that's interesting. I don't know if anyone else has heard that. He says on the U.S. side, you might want to contact the SEC. They might be shutting down 3 times leveraged ETFs. So we'll watch for that for sure. Thank you for that. And Dave's got the SQQQ as well. All right. Thanks, everyone. That's great stuff. All right, looks like no questions. Let's move on. I'm really pleased once again to have Dr. Ed Subak from our Florida the Villages user group. He's going to talk about thematic investing, bring us up to date, finding more opportunities. And I've just got to find Ed over here. And Ed, are you able to hear me okay? And can we hear you?
Dan, it sounds like we're okay.
Awesome. So I'm going to turn over the screen to you if you've got your slides up and ready to go. I'll
All
give
set.
you the screen if you like, and you can advance through if you like, or I can advance for you and you just give me the cues.
I'll do it myself.
That's what I thought.
Just too many
Hang
years
on
of doing it myself.
Yeah.
Okay, how?
Here, I'm just going to just quickly make you the presenter. And so that'll show your screen. So you just need to pull up your, I think you need to agree and then pull up your slides and you're ready to go.
There we go.
Awesome.
Good.
You're all set. Thanks very much, Edward.
Okay, hello everyone. I guess this is the third installment of thematic investing. And what I want to do today is give a little bit of history for people who haven't been following this set of discussions, and then go into some trading and chart ideas, followed by a string of new ETFs. Now, what I do with and why I'm interested in the thematic ETFs is I'm trying to better the QQQs in terms of short-term price gains. Now, I don't see thematic ETFs as long-term investments, although sometimes you may be able to make gains over a period as long as a year or more, but many times you won't, and I'll show some examples about that. I'm currently covering, and it varies from time to time, 32 themes and approximately 130 ETFs. In the time we have available today, we're going to cover 18 themes and 43 ETFs, sometimes just grouped within a chart to review what their performance has been. A few things for those of you who are interested or want to do your own research. What I won't be able to cover are the themes of what I call China Rising, which are ETFs that are based on things going on in China, which right now obviously is moot. Energy ETFs, things like alternate energy, we'll talk about one of them, solar energy. Infrastructure ETFs, and one large topic which is called socially responsible investing, or ESG ETFs. I also track several hundred stocks, but that's a whole other animal to itself. Okay, here's this slide is not in the original package, Dan. I will send any changes to you. What I wanted to do is give people an understanding of what I do in terms of the projects I follow and the various ETFs primarily, and some stocks. Thematic ETFs is the overall blanket that covers what we're going to talk about today, and ESG ETFs. ESG basically is environmental, social, and governance ideas that are related to the companies within the ETF. Are they operating in a manner that's say socially responsible, or are they following environmental guidelines and so on? This other area down here, which I've been looking at recently, asset class ETFs, is a very simple one where you take a bunch of assets class ETFs and basically run back testing on them. I was kind of surprised at the gain. This gain of 10.6% is actually from the March 9th, 2009 bottom of the market. Only a few trades, about 25 trades a year, and you get 10%. So, but what I want to do also is note that where thematics fit in is a third category, where traditionally we looked at sectors and industries. Now we look at themes, where we're picking out companies that were in different sectors and different industry combinations that have a specific purpose. Now, our outline today, we're going to review, for those of you that haven't seen it before, what are driving thematic ETFs. We need to understand megatrends. Many people have explained that we're in the fourth industrial revolution. We'll talk about that. I'll give you an example. The biggest megatrend right now is world demographic change, and covering in two areas, aging and population shifts. We're going to talk about why consider thematic ETFs, and we'll give some trading examples. We'll chart and trade the ETFs, and then talk about some themes, including the previous ones. Now, a megatrend is a long-term change that affects government, societies permanently over a long period of time. For example, aging, we've talked about things like social media, the upcoming deployment of 5G and related things. And in the past, these megatrends have greatly altered how people lived and worked. One of the largest one, of course, is this one listed here, urbanization. You know, cities grew and the way people worked, the way they lived and so on changed dramatically. The economy changed from an agrarian economy to an industrial and so on. Now, a megatrend is forces that underlie the economy and the society, and they change the way things go on. These are some of them. For example, aging population, technological changes. In the fourth industrial revolution, we're undertaking massive changes to the way we communicate beyond social media. We're looking at systems that are either robotic or driven by artificial intelligence that are going to be monitoring or running things that either people used to or that people couldn't do before. For example, the Internet of Things. We have social and cultural changes, geopolitical change, and of course, climate change. And so we need to understand the fundamental impact of these changes on economic, political, and social trends, and where they occur, and where are our investment opportunities. I just wanted to highlight where the fourth industrial revolution fit on the timeline and what drove those. Now, this is a different chart than last time. This is the basically 1800s time frame, where the conquering of steam power drew first transportation and manufacturing and so on. We get into the early 19th century and electricity, and specifically electricity combined with assembly lines where people could assemble things as a group, for example, automobiles, refrigerators, and so on, made dramatic changes in the world. First, you invent the car, then you'll be able to produce it more quickly, and then you can make it cheap enough so that everybody can afford one. And then that drives road construction and on and on and on. You can see the impact. We're finishing up the third industrial revolution. Notice here too, they include all the social media, the beginning of computers from way back to the, well, this is the IBM PC, even include Apple Watches and so on, and the iPhone. So what we're looking at now is what changes are coming up that are going to give us investment opportunities. And we have, of course, autonomous cars, the spread of robotics, and climate change. We have wind power and so on. So these are the areas, and in this case, find ETFs that give us opportunities. Now, I wanted to highlight, again, population change to give you an idea. This is the largest mega trend of this century, as far as I can tell. We have two charts here, one on the right, one on the left is for 2015 and a projection of 2050. And what you see on the chart is on the left side, the areas in green have population over 60 years old of 20 to 25%. So the United States, Canada, for example, most of Asia, Australia, 20 to 25% of the population is 60 years old or older. And in some countries in Europe already, for example, France, it's higher, it's 25 to 30%. If we go ahead now, in this projection, it would have been 35 years, but now only 30 years. We see, well, China is going to have a higher population over. You look at Canada at 30%, almost all of Europe at 30% and older. So you want to learn what is going on with these trends, because, for example, what is an opportunity? Well, if we're going to have more people over 60, you're going to need medical assistance, you're going to need retirement communities, you're going to retirement homes, you're going to need healthcare and so on. And so those areas are very likely to increase in importance, and of course, investment possibilities. I also want to show the opposite part of this trend. First, this is a graph that shows the shift in population over the time frame to 2050. And what's interesting here is on this section, for example, we're looking at drops in population from 0 to minus 20%. So if we take China over here, China population is actually going to decrease by 20% or as much as 20% in the next 30 some years. Now, when you combine that with the fact that population is aging and population is decreasing, you have automatically problems in the economy. Now, for example, the biggest one is, I don't know China's healthcare system, but if it were similar to ours, which I know it is not, you're going to have fewer and fewer people working to pay the bills for more and more people retired. And so there's an economic problem there. Canada and US, for example, are going to see an increase in population, but those are basically due to immigration. The biggest surprise I found was the increase in Africa, with a population, and say for here, I don't know all these countries from their images, but will increase by 100 to 140%. So the population growth is significant in Africa, where the rest of the world is seeing small growth or even negative growth. Those will have impacts on our investing opportunities. Here is a graph. I decided to show you why I'm motivated to do this, although maybe it looks like I'm being greedy. On the graph, we have plotted, of course, the Qs ETF and the SPY ETF. And if you look at the quick test here, you can see the total gains are kind of staggering. So if you bought the Qs ETF on March 9th, you were the smartest person in the world, knew that was the bottom of the US market, and you held on to it to about a week ago, you would have made nearly 800%. Now, I don't consider the Qs a buy and hold situation, but maybe I should have thought about that earlier. Now, this is just the SPY, which represents the basic market. Now, when we look at the thematic ETFs, in the short term, we want to do better than the Qs. So, as I said earlier, maybe I'm being a little bit greedy. Okay, this is the summary. I wanted to just show you some things of why we're doing things a certain way. This is a table from the original ETFs we talked about starting 2 years ago, and I wanted to show you that some things have improved. Notice, for example, for ARK, which is the innovation ETF, the assets under management have improved. Now, why we're interested in that, and it will come up with a couple cases later on, is I find that when the assets under management are greater than $250 million or 250 million US dollars, the ETF is not going to disappear. And we'll look at a couple or identify a couple ETFs that actually have closed because they never accumulated enough assets to make it worthwhile to the provider. In other words, the business didn't really grow into enough assets. So in this case, we can see all of them have improved, and now these are fairly large. I mean, these are all above 250 million, and so from a closing or point of view, they're unlikely. Whoop, missed one. So out of the original, 7 of them now have significant assets from an thematic ETF point of view, and these are still in the kind of what I call the yellow area. So those would be the Internet of Things and social media ETF. Likewise, they also suffer problems with respect to these two with respect to liquidity or shares traded per day. Now, Stan mentioned liquidity for ETFs is a little bit more complicated than for shares, but for trading purposes, I prefer to see at least 50, but usually better than 100,000 if the trade is longer. If the trade's shorter, then I look at what is actually going on in the last few days, because some of these, even though they might have trading volumes of 10 or 12,000 shares a day on average, some days they only have 1,000 or 2,000 shares. And this is a scorecard. As you can see in the scorecard with the originals, 2018 was a terrible year to be involved in these for the whole year. But 2019 improved, and up until about a week and a half ago when I did this slide, all of these ETFs were on the positive side. Notice things, even lithium was coming back, and we'll look at that chart a little bit later. Now we've changed direction here for a moment and take an example. This is the TAN or solar energy ETF, and what is plotted here from the March 9th, 2009 bottom of the market till about a week ago is a listing or a price chart for both of these. So we have the Qs here, which did this remarkable growth, and we look at solar energy, which basically died. And so if you thought that the solar energy ETF was a long-term investment, you lost money. But if you look at the quarterly charts, you'll notice that, for example, this is the solar energy ETF, and here are the prices or the appreciations from 2009 to 2020. And you notice that here are good years in the green. Notice this is a significantly good year, which is 2013, and these are also great years here. But for the most part, year to year, this ETF lost money. If you look at the Q side, you notice that almost every year the Qs made money except for last year. I'm sorry, except for 2018. But let me take this and look at it a little bit differently. Let me highlight here the basis of the trading system that's behind all of this. When you look over here and you see these highlighted in blue, these are the quarters of the year where the TAN ETF here beat the Qs in the same quarter by at least 3%. So this one's about 7% and so on. So there are quarters where if you owned TAN versus the Qs, you would have made more money by at least 3%. And I said 3% because of errors and so on, and the time it takes to deal with all of this. If you look at a most recent example, you'll notice here, this is basically only from December till mid-January. The Qs made about 10% and TAN made 20% in actual appreciation, but on an annual basis, TAN doubled the Qs. And so these are the situations that I'm looking for in terms of a few weeks to a few months trading. Okay, I'll switch also now to do some chart reading. This is a chart of the ARK Innovation ETF on a VectorVest performance graph along with SPY. Basically, ARK is here in blue, SPY is in green, and the Qs are in yellow. Now, what I've marked here is a local market pullback date of October the 8th. Now, when I look at this chart, even from this beginning, what I do is the following. I map out on a performance graph these areas. So again, number one is the October 8th pullback. Then I map out, for example, here's the Qs, number 2, and here is ARK, number 4, and so on. The reason for pointing this out is notice that the slope of this line is higher than the slope of this line. So if I'm sitting in cash, I can either buy this one at this price or this one at this price. Now, if you do the math, what you find out is because, first of all, this pulled back further, we can see that because the Qs went through a straight line and ARK dropped down. So we know there's a pending opportunity there for a short-term trade. And we also see the slope here is now going up, and the slope here is going up at a slower rate. And this is the actual curves now. You can see the ARK outdid the Qs basically by, let's say, almost 14%. And if I do the quick test and run this basically from October the 8th, or starting date down here, until the 22nd of January when I ran the test, look at the results. The Qs went up on an annual rate to 73%, but ARK went up by 40%, almost 40% higher. So for a short-term trade, I can't beat 40%. Okay, now let's look a little bit further at charting and trading, and we'll get in following this into how to enter and exit in this particular system. We're going to look at ARC again. This is what a typical chart will look like on my primary layout in VectorVest. But I want to point out the elements of this. You can see what I've done is I've highlighted and numbered these 1 through 7. I'm using the 3/8 exponential moving averages that Petra Hess has been championing a couple of years ago. I'm using the 40 simple moving average as a backup. I'm using RT here. I'm also using the 40-day moving average of RT. Of course, using volume. You know, highs like this where there's sell-offs are very important. Highs like this where there are buy-ins are very important. And then MACD. Of course, MACD is used in a classical way. Now, if I want to look for an opportunity, we pick this recent market bottom here again because of the slope changes, this one here and this one here, and see that there is a trading opportunity for this lower curve, which is ARC, of course, versus the Qs. So if I couldn't find an entry point here, and I thought because of other information, like all of VectorVest's market information, that the Qs were going to be a successful trade, I would buy the Qs and wait for an opportunity. Or if they didn't find that situation, I would be in cash. So if I focus on this section over here, on the next chart, I pulled out all the pieces. And on the table on the right, on the left explains to you all of the different entry points that I find. Starting here, actually, by the way, if you see these yellow lines in here, they're in here because I use those to find my numbering scheme when I move a VectorVest chart into my charting software. So just ignore those. So when 0 occurred, this is actually the starting point. This is a low bottom in the market. It's not on this chart because the stocks responded later than that. If I look down here at MACD, and this is kind of tricky because it's kind of small here. If you see in this area here, from the low point, MACD right at number 1 has gone up. In other words, the bar has gone less negative for 2 days, and that's what I consider a speculative entry point. But notice here that MACD goes up, or lower bar, or smaller bars, and then goes back down. So this is actually an area of whipsaw, which I've marked here. So that's a little bit tricky, and that's why I labeled it speculative. I do like to get in some situations where as the bars in the MACD histograms start to get smaller from the negative side, the second bar in is potentially a buy point. The second buy point in this case is when we had the primary wave. It's up here. And that's a potential buy-in. I consider that a little bit more aggressive in this case because the 3 EMA, which is green, is still below the 8 EMA. The third entry point right here, you see part of it right here is we finally have the crossing 3/8. And at the same time, down in the bottom here, 3B, we have the MACD crossing from negative histograms to negative bars to positive bars in the histogram. So we got 2 possible points here. So at this time, I consider this trade to be more prudent, and I would potentially put in a full position. Now, there are other entry points here. For example, number 4, this is where the due occurs in VectorVest. I would consider that another possible entry point. 5th is a confirmed call, which occurs right here. And the 6th one is where RT, right in this area here, crosses above its 40-day moving average. Now you say, well, what do I need with all these entry points? Well, you have choices in position size. For example, here, this is the first point I labeled prudent, and it's possible to put in a full position. But because given market information, which I'm not showing, and given the fact that we have the 1, 2, 3 points, I can add to the position. Or in the 5th point, I can add more, and so on. If I thought this wasn't not particularly safe in, I could do a partial position and move up this way to a full position over time. And today, since its trading costs are zero, I can do more buying in or pyramiding into my position if I want to. Now on the exit side, it's generally pretty simple. In this case, the chart again is on the left, and of the different events that are go on. I start down here in zero and say, well, in the time frame I'm looking to get out, which of course looks suspicious when I start seeing the turn down of the 3 EMA here. MACD isn't telling me very much. It's actually very small bars, and so it's uninformative as far as I'm concerned right here. The first exit point, of course, is right here. Number one, the 3 EMA drops below the 8 EMA. Down here, the second point is RT dropped below its 40-day moving average. And then finally, in this case, a large red bar in the volume curve shows that I certainly should have been out. So I would have probably gotten out here most likely in this situation, but you never know. And if you need confirmation, you can also look at when it crosses the 30-day line as another event. Okay, let's shift gears now and look at some new themes and their corresponding ETFs. This is a chart I just wanted to bring up and give you some sense of the timing on what's going on with 5G and basically the telephone network service or cellular services. These are the time frames here from way back in 1G, which was not called 1G at the time. And amazingly, we're looking at almost 40 years ago. There was no data transfer. I mean, it's just a phone. And there was no onboard storage. And look where we are already today. We come back up more than 35 years later. We got tons of memory and more apps than anybody can count. Where we're headed is even more memory and more onboard storage. So basically, we're walking around with a desktop computer on our wrist, or in some cases, if you're dealing with a new iPhone, Apple Watch. Let's do a little comparison stuff and see what's going to go on here. Now, when 4G networks were introduced, there were close to 700 million mobile subscribers worldwide. That was probably 1 in 5 people. When I found this data, 2017, there were more than 7 billion mobile subscribers worldwide. Now, this is a little bit deceptive. They say subscribers, but this would require some people to run at least 2 cell phones, because at the time this was written, there was only 8 or 9 billion people, and I don't think in many countries people own cell phones. So as you see, going up the population, even if they add more cell phones, some people have a personal and a business cell phone. And that's, from my daughter's point of view, that seems to be more and more common. But in this article, which, by the way, if you're looking for source information, I put that down at the bottom, for 5G for Dummies book. The estimate was that there would be 20 billion Internet of Things devices and 9 billion mobile subscribers worldwide. Internet of Things could be all kinds of things, from cameras, monitoring things for security purposes, temperature gauges, that's a whole conversation in itself. So 5G networks must have several properties. Of course, we know we want more speed and we want more feeds to handle all these devices. You've got a massive scale, massive, very high predictability and very high reliability. And this is the interesting part of this. As many as 1 trillion connected devices. Now, most of those devices are obviously not going to be telephones. One of the ones here, they say potentially life-saving application would be a device that you would wear. Could be your watch on your wrist or some other device that you wear that monitors some factors of your health. You know, if you had been a heart attack victim, it may be monitoring what's going on with your heart, and it would be sending information in real time to some computer system somewhere that would be monitoring what's going on and making decisions I suspect even up to the point where they send an ambulance to your location. So a lot going on here. And you figure you add then 10 billion people, half of which have these kind of devices on them. You can see where 1 trillion devices come up very quickly. Now this particular table I provided an example of. This is a spreadsheet that I use to track all these ETFs. And I just wanted to highlight this because you might find it useful. Basically, I start out with a list of the themes, and we're talking about 5G here and the Internet of Things as important, also with the 5G idea. The symbol, the name, the provider. For example, you want to understand the provider in the thematic ETFs because some of them are very small companies with their very first ETFs, and they do real well, but the company doesn't survive, and so the ETFs may not. I put in my charts, for example, assets under management, 250. This is the range in the middle, and then on the end is the under 100 million. And I also put in here something that I consider important is how concentrated is the ETF in holdings. Now, if the top 10 holdings are 60% of the ETF, then I question whether I should be picking stocks out of that as opposed to the ETF, because one of the reasons for getting into the ETF is to get a wider range of stocks, whereas if the holdings are so narrow, and there are some in my list that 60-70% of the assets under management are only 5 or 6 or so stocks, then I got to question whether I'm going to spend time with it. Now, if we look at these 3 ETFs versus the Qs, and this is again from that October date, we see the Internet of Things, SNSR, has actually done better than the Qs for several time frames. For example, here, and it's starting to pinch. But the 5G ETF has not, and then the other this one is related to the whole range of 5G devices. This one is SRVR. It's related to servers and related technology that is used to support cellular service and so on. So right now, from my point of view, the two FIVG, SRVR do not provide opportunities, but that could change at any time. Okay, let's look at some other new ETFs that weren't on the original list. We have artificial intelligence, AIQ. Notice that the assets under management here in the upper left, it's only 47 million. Typical daily volume under 10,000. These happen to be the dates when I gathered the data. But if you did a quick test, you can see between the 10/8 and the day of the test, we had 21.7% gain. So I follow this one. 3D printing. 3D printing, the chart's a bit of a mess, as you can see here. It goes up and down and up and down. I don't trade in such a short time frame that I would deal with that. But again, from the 8th of October to the end of the test, it gained 15%. Also could consider drones. I think drones is kind of early in life right now because people haven't figured out how to deliver packages to your front door safely with maybe 2 or 3 million drones floating around in a large city. So as that takes off and other applications, this will grow, but I think it's going to be slow to grow. Assets under management still small, volume very small. This one happened to be done on the 11th. Chart's okay, but it did gain 13%. Now remember, the Qs gained 20% in this time frame. And then this is also important. This area is really ripe for opportunity. This is genomics. This is part of a series of healthcare. In this case, healthcare genomics is a theme, but there are other ones too. There's healthcare immunology and a few other areas that are worth looking at. Some have ETFs, some don't. This one is one of the better ones from the point of view that the assets under management is high, volume is high enough, and the curve is relatively decent until the last couple of weeks where we had this drop. But if you just did a quick test from here to the last date, You had 23%, which just beat the Qs by my 3% margin. Online retail. This one I haven't been able to figure out, and the curve is terrible in the past. We have seen an uptrend here. It gained 20.7%. It just makes the cutoff for the upper group of assets under management. Volume is not great, but it's a little bit better. I would consider these trades a little bit more aggressive. And in the time frame we're talking about, it barely made my Qs +3 cutoff. This one has been kind of a real weird collection of ETFs. A few years ago, about 2.5, 3 years ago, the marijuana ETF, MJ, was created out of another ETF, and it just rocketed off because everybody was now going to do recreational and medical marijuana all over the United States. And so this ETF and, of course, the corresponding companies gained a lot of interest. And as usual, when an ETF is in a popular area, everybody tries to create another ETF. But I just wanted to point out, again, the price line. This is the Qs, and these are the two ETFs. The MJ went up, and it went down. And I kind of feel sorry for the ones that got into YOLO. This last one here corresponds to the purple curve. They got in, and they rode this down 50% from the inception date to where it is now. So I'm sure they are not very happy campers. I've combined lithium and another ETF into a theme I'm calling technology materials. Of course, lithium is the driver behind all of the electrical vehicles and so on. That one also did this strange curve. It grew up very quickly to, I think it was fall of 2017, and then it dropped off. But right now, it seems to be coming back up. If you look at, this is REMX, and this is lithium. Now, REMX is a group of things called rare earths, or some people say strategic metals. The purpose of these is, for example, there is a rare earth called tantalum. Tantalum is a rare earth metal. It is used inside of capacitors, and everybody that carries a cell phone is carrying tantalum capacitors, just in the electronic circuitry. And so you can imagine that provides the best capacitor capability for a very small size. And so the unfortunate thing is they're called rare for a reason. Right now, China is the biggest source. There are some other places, but the US, for example, has very little. North America does not have a lot of rare earths that have been found. And so it's strategic because you have to have it for electronics, modern electronics. But it's certainly problematic since it's in China, and that presents all those political issues. The robotics group, this includes robotics in both AI themes. We talked about a couple of these before. There are 6 of them. The last one is triple leverage, which according to the note I heard earlier may be going away, but bots and Robo have the largest assets under management, well over $1 billion. The other ones are follow-alongs. As you can see here right now, they're not very interesting in the short term from early December. They're kind of following the cues. The triple leverage UBOT is doing this crazy curve, but I wouldn't follow this one in that particular time frame. You may be more adventuresome than me. Good luck. If you're familiar with the term blockchain, blockchain is the technology that sits under Bitcoin and other similar currencies. It also has advantages in terms of performing financial transactions. The design of this is such that it's extremely difficult to corrupt a transfer. So if one bank, for example, wants to show transfer of money to another bank, the way this is designed is that you cannot go into a single location and make a change to look like it was, a different transaction. So someone could skim money off of a system or that. But also notice this was another one. It was very popular, So people created all these ETFs, and 2 of them have already disappeared. And so this is why I put the $100 million asset under management in the picture. That's important to me. Cloud computing, we talked about Sky in the past. Notice there are 3 others created. Cloud is doing well. It's actually accumulated enough assets to be in the green on my curves. Notice that T-Cloud is already closed, didn't make it a whole year, and I'm not sure where Wisdom Trees is going to go. These haven't been interesting through the early part of the year. I think right now the curves don't tell me anything. Cybersecurity, we've talked about cyber and hack in the past. They're large ETFs. These 2, Bug and iHack, are relatively new. I don't believe they're in the ETF database, but we're going to make arrangements so they are. We'll talk about Bug Global X in a few minutes. But you have the same situation here. I want you to draw attention to. You have basically, this one is cloud, and the Qs are doing this. And so there is an opportunity in here because the slopes are different. If I pick a point, again, October the 8th, and this is some way to look at curves, because it's very difficult from individual days to look at these and say, well, here's an opportunity and here's not. So down here we have hack, and then we have cyber. They have the Qs, and of course, as I said, the October 8th date right in here in a similar situation. Okay, that is the coverage of what I wanted to do today. Remember, my trading strategy for this is to find ETFs because of the, if you want to call it the mega trends, fourth generation or 4th industrial revolution, or thematic investing, that do better than the Qs by 3%. Because the Qs, assuming this is the 4th industrial revolution, it is highly likely that the Qs will continue to appreciate in a fashion, maybe not as fast, but similar to what they've done in the last 10 years. For example, if we're in a good situation like we've been in the last 10 years, maybe not as great, the Qs should appreciate faster than SPY. And of course, SPY is the benchmark for the market. The 2 major trends that we have to keep in mind: demographic changes and how they impact, especially ETFs that are multinational or international, and then this accelerating technological advances. Areas where I feel less comfortable, where I see a lot of changes, are going to be in the biotech area, cancer research, and so on. These are all providing trading opportunities, but remember, they're in the short term. We talked about charting methods and trading them. Stan, I think, is going to follow up with some other methods, which I'm looking forward to. We talked about some other themes: 5G, artificial intelligence, 3D printing, drones, and so on. We reviewed the previous ETFs and themes. And then just for your potential use, here is all the ETFs we've covered. As I said, some are not in the VectorVest database yet, and all their corresponding themes. I wanted to give you motivation to take a look at that. I'll ignore the U-bud in case it's not going to be around, but these are the gains that would interest me relative to the Qs. And this is, again, short term. This is only 3.5 months. That's more than enough time to get in these and get out of these safely. And then finally, this slide's not the original package, but I'll send it to Stan. I wanted to give you some resources if you wanted to look at this yourself in more detail and put together your own research package and candidate ETFs. In US VectorVest, look at the Global X watch list. Now, there are thematic ETFs, but Global X also puts out high dividend ETFs and other things. We talked about these, for example, they're Global X ETFs, but that's a good place to start since they're already in VectorVest. You should also look at the ARK Invest ETFs. They are the ones we talked about here. These are the ones that I've listed. I think I cover all the ones they have, except there is one IZRL. which is Israel technology companies. It's also something interesting to look at. If you want to read more about this, I just found this article. It's been updated in the last few weeks. Investing in Tomorrow, a white paper on thematic investing. And it is a Global X publication, very informative. For helping you with research, the things that VectorVest provides are one thing, but you may need to look at assets under management. I also suggest in some cases when you get to smaller ETFs that you look at funds flow. Funds flow is basically how much money is flowing in and how much money is flowing out of an ETF over time. And so you can find some of that information. This is a free site. I can't beat the price. This is a subscription site to get some information. I like etfdb.com because it gives me a more thorough situation with holdings. And I want to thank you.
All right. Well, thank you very much, Ed. My gosh, what an amazing amount of information. Pretty fantastic. I'm not sure what I did there. I did something wrong. Listen, thank you so much. There's comments coming in. Awesome. Well done. Kathy says, wow. Alessandra says, whoa, this fellow is smart. So I think it's pretty cool. I'm going to ask to get back the screen, and then we'll get on to any last questions in the last presentation. Let's see, I think I have to do that. And I got to somehow get my presentation back up. All right, let's just see if everybody's looking at a big question mark. Yep, looks all right. Let's have a look here. Okay, so let's see. Yep, there we go. I just have to do this. There we go. Okay. Again, thank you so much, Ed. There were a couple of questions before we move on, and we'll maybe try to answer some other questions at the end. A lot of great comments coming in. Oh, gosh. Amazing. Bob, Jim, Tanguy, and now a few others are asking the question, Ed, when an ETF closes, what happens to the shareholders, to the owners of that ETF at the time?
I probably should have recorded that answer because I've gotten that several times in other talks. Basically, it's like liquidating a business. In other words, the fund creator will basically sell off the shares, redeem them basically through the underlying stocks, create a pool of money, subtract out the cost of closing the ETF, and then distribute the remainder to the shareholders. So, so if you own 10 shares, you would get 10 parts of that bundle of money. So basically, it's a liquidation.
Okay. And Ken was asking, is your confirmation the 3 and 8, even if there's a buy rating in play? I think he was asking more when you were looking at sort of the exit side, if you get a 3-8 crossover to the downside, but the ETF may still have a buy. Which do you kind of go with?
Well, the challenge is I'm not typically looking at one ETF at a time. I'm running probably a half dozen to a dozen of these ETFs and other ETFs that I'm running. So I don't always look at the buy sell recommendations VectorVest, and a couple of times when I do, I find them slower, and for my circumstances, I find the 3 and the 8 and the other ones a little bit more helpful.
Awesome.
And I like the buy sell hold information, especially when buying into on my dividend portfolios.
Okay. And okay, and Bill was asking about the setup on the performance graph, and I'll cover that in a minute or two. We will be going over our time a little bit, not Ed's fault, but there was just so much on the market situation that I wanted to give that a good review. So we'll go a few more minutes. If you have to leave, I understand, but we will have the recording. People have asked me if the slides will be available, and yes, I do send out the slides as soon as I have the recording. I send them both out, and you'll get them, I imagine, tomorrow at the latest to kind of send them out in batches. So there you go. All right. Just looking for any last question. I think Tom James or Tom has covered your question quite well just at the end. So I think we're all good. There may be other questions I've missed, Ed, but I think I'll move on, and I may have to send you a question or two. It looks like a few more are coming in just at the end here.
Sure.
Yeah, but I want to thank you again. You've really opened our eyes again to the possibilities in these mega trends. Oh, that was one of the questions. Since you are looking at mega trends, is there a reason why you kind of consider them short term? Is it just you want to catch the trend, but you still want to be flexible, or how do you look at it?
Well, there are a lot of factors that are playing into what the ETF does against a trend. I mean, for example, let's take lithium or the rare earth ones. Lithium grew very quickly as people started talking about electric cars, autonomous cars, and so on. But lithium, like any other mineral, it's not created as you need it. It's either have too much in supply or you don't have enough. Or people, when you're buying automobiles, you have people that are buying automobiles that are first in. They're kind of experimenters. They have high budgets. They want to be the first one in the neighborhood or in their country club that owns a Tesla. So those things go fast, and then it settles down, and the ETF drops off as people change interest. So the trend may be long term, but it's not a smooth trend. And the ETF responds even more quickly because since it is also in a stock market, the market responds to other things beside the mega trend in the short term, like coronavirus or the trade war between the U.S. and China and so on. So I go in short term because my long-term position is the Qs. For example, was in the Qs from early fall 2009 till now. So I could, if I was a little smarter then, I could just have forgotten all the investing and just go out and have my margarita every day. So the short answer is the ETFs respond to other factors beside the trend, including all the short-term market ones. I don't want to wait and assume that something's going to happen because the trend is one thing, the ETF is a separate thing.
All right, Ed, thank you so much. That was just an amazing presentation. I think it was Jerome that said, just excellent as always. I think it was Al said, excellent, great presentation as always. I think he's heard you present before and maybe to the group. So thank you so much again. And we really appreciate your willingness to share because you've obviously done so much research and put so much thought into your strategy, and I think it's pretty fantastic. So thank you very much, Ed. And I also loved Ed's graphing. I'm going to show you a few additional ideas for you to consider for graphing for just generally ETFs in general, and then we'll close on this. Oh, and I did want to mention, Adrian had a comment. Bloomberg TV on Wall Street Weekly show on Fridays. Last night they were reviewing the ARK funds, and he found this very interesting. So kind of a nice compliment to what Ed was presenting, and you can go and review that because they do have it up there. And then, so let's move on. And the other thing that I wanted to mention is from a question. You can use these ETFs, and once you have the ETFs and you see it rising, if you prefer to buy a stock, you can see what stocks are trading in the ETF and maybe pick out the best ones from there. So just another choice. But we've seen the results that Ed is able to achieve with these mega trends, and you just got to follow them. And we really appreciate Ed giving us the heads up on all the new ones again today. So I just described ETF there, but my suggestion is keep it clean. Here's just a clean graph with 8 moving average on a weekly graph. Buy on the rising EMA or wait for the buy rating in many cases. Now, a lot of these ETFs that are new, they may not get the buy rating, so you do need another way to get in a little bit earlier than the buy, but the buy ratings work quite well also on the established ETFs. So this is one that I have owned twice now and bought and sold, and using this type of a setup with the 8 moving average hitting a lower low or an S for the sell side of things. So it's just an 8 moving average as the proxy for the share price. You'll recall that Dr. Barbara Starr showed us how to use the 3 moving average as a proxy for the stock price, but I'm using an 8 and the technique is the same. We buy when we get that buy and when the price is moving up, and we just make a note of any lower highs, make sure we don't cross below this lower or this high, lower high here. So we're still in an uptrend, and here we can see we fell out of the uptrend, and so it's time to exit, but we had a nice 29% gain. And then we can come back in when we start to bottom and rise again, take our gains, and we're into that stock again. This is an 8 moving average. You know what, Mohammed, there's not much difference between the EMA and the moving average, so it's whatever you're comfortable with, but this is the 8 moving average, not the EMA. Good question. RT is the key. I have found when you're trading ETFs, whether they're mega trends or triples or whatever they are, you want to have RT on your chart. I prefer just a line RT. You can put the area on, of course, but I prefer the line. You can see the midpoint is right here with the yellow line. And just look how well you see when it starts to rise from a bottom and gets above the 1. It can be a terrific entry, and then you can monitor the 8 moving average from there. And of course, you can get out a little bit earlier using your trend lines there and falling RT. So momentum is diminishing. You can get out a little bit earlier and save more of that profit. And similarly here, great entry point, very simple, and very simple to find an exit point. I mean, you might not even wait for all of this problem. You might come out on the first time it crosses below this support level or this area. Okay. Yeah, Gilles, the EMA is slightly faster. You're absolutely right. And sometimes that's good, and sometimes you just like it the way I've got it here. So you can make your choice. But here's again an entry, and notice the RT just rising beautifully here, having found a bottom. I didn't see any divergence here. Price was falling as well as the RT, but once it started to rise and got above the 1 level, that was a great entry point. And it's in, you know, there was some discussion in the chat box about slope, and is it really important to look at slope? Folks, it's really important to look at slope. I mean, this tells us this is a nice orderly moving average. It's not parabolic. It's just going up nice and steady at about a 45 degree. You could follow that all the way up. There's no need to exit, even though RT did show some slowing of momentum here and there. It certainly never got close to falling below 1. And so here again, RT, but this time using a 3 and 8 moving average. And again, you can use the 3 and 8 EMA. I put them both on the graph. There's just absolutely very little difference. Just a little slower with this one. And for my purposes, it's this charting of ETFs quite well. And again, crossing the RT above 1 is a great entry point. Now, in this case, you did have a bearish RT divergence that was quite powerful. You can see price moving up really strongly, hitting a higher high, but RT hitting lower highs, and that told us the momentum was starting to weaken, and we went from a buy to a hold. Another indication momentum was weakening, and then there's the cross where you should be considering a sell, and RT falling below 1 at the same time. You've got your 21% gain. Take it. Just take your gains. And here's FINX, and you can see again the 3 and 8 or 3 and 8 MA on a weekly graph works extremely well. The buy rating is a nice confirmation in this case, and even before a sell, you could take some profit. Turned out the stock, the ETF did move down lower, not terribly much lower, so you might have just stayed in there. It went from about 31 to 28. So you could save some of that grief, but if you stayed in the whole time, you would have been fine as well. Thank you, Georgie. Mitchell says a nice, simple chart. Yeah, and that's what I was looking for in both these setups. Just keep it simple. Follow the slope of the MA and look for times when the stock is in an uptrend and when it's in a downtrend. So here's the TQQs. I have to mention Bob Turnbull's weekly strategy with the 2 and 5 EMAs, just a little bit faster yet on a weekly graph, but you can see it works extremely well also, and the RT is a nice complement to that as well. You can put on stochastics on there as well, and it's a nice complement as well, looking for divergences and looking for times when stochastics is above the 50 is a very strong indication of continuing uptrend. And again, you can look for these crossovers, and you will get an earlier crossover with the 2 and 5, which means you're going to take a little bit more profit and get out just a little bit earlier. And the RT is helping you recognize momentum is diminishing. So some really good opportunities with the 2 and 5 as well. So Bill, I'm going to show you how to graph that, and then I think you might have been the one that asked about the performance graph. So I'll just show you how to graph, put on your moving averages before we go here. And the question from Nasky is, should the RT combined with the US confirmed calls? Well, you always want to be more cautious, of course, when the confirmed calls are down. VectorVest advocating not buying any stock. So you might want to be, if you see this kind of a setup and you're thinking, well, I'm not going to sell on this crossover, I'll wait. If it's a confirmed down call and the DEW is down also, it happened on the same day, Friday in the US, well, you want to play defense. You want to get out. If you were thinking about hanging in, don't. Get out, especially with a triple. But any of the mega trends, I would say as well, if you get the crossover, whether it's a 2 and 5 EMA or just a simple 3 and 8 moving average, and you get the crossover, or you've lost the uptrend, you want to get out. If you see the momentum waning with an RT and RT getting closer to below 1, you want to get out in a downtrend especially. Peter, Bob presented on his strategy last month in our weekly or a monthly forum, as well as in November. So if you email me, you'll get my email at the end. I can send you those replay links, or you can go to a YouTube channel and find them there as well. So here's using the performance graph in a little bit of a different way. I put all of Ed's outstanding ETFs into a performance graph, and then I can just toggle them on and off and look for the ones that are performing well right now. So these are the top 6 ETFs on a 3-month chart. You can see they've all turned down. So to let's see, whose point was it? To the point about, do you want to buy when the market is falling, or you want to sell when the market is falling? I think your answer lies right here. This is a 3-month performance graph on a daily, and you've got nice gains with all of these. Why not hang on to them instead of letting them go? Mohammed, you're looking at the 2 and 5, and that's always a personal choice, right? 2 and 5 on the cues. So look to your strategy and make your decision. And what I would say, if you're following Bob's strategy, whether you've got modified strategy, follow your strategy. All right, so that's just a quick review, and I just will go in here and pull up, if I can find my program. There it is. All right, so I'll just go to initially I'll go. Well, let me go here. And by the way, here's the weekly TQQ. So is it above the 2 and 5? Let's see, what have I got here? This is yeah, this is Bob's 2 and 5. So it is slightly above. So on Monday, following the strategy, you would be a buyer of TQQQ, right? And that's a tough call because look what's happening. All the guidance is pulling down. Bob is actually, or at least he was on the call, Bob. I believe your strategy would call for a buy or a hold, but knowing the market condition, let's see, I've got to try to remember the strategy, but what's your take on it, Bob, if you're there? I'll wait for an answer. All right, so let's just show how we got these moving averages on here. It's a good question. I think everybody's probably wanting to see what best is, but just know the market is really set poised to go lower. Yeah, Bob's following his strategy. It's a buy. I mean, the 2 is above the 5, and that is the strategy. And he's had long-term proven performance with it. So follow your strategy. All right. So here is, if I didn't have any moving averages on the graph, I would just come into the price area, right click, add a moving average. You've got simple, exponential, and weighted. So for example, if I wanted to add a 10-week, because I've got a weekly chart up, if I wanted a 10-week, 8 moving average, I'll just click on simple. That's the simple moving average. It drops down and I click on 10, or sorry, to 8, 10 to an 8, highlight it, and then I can right click on it and I can change the style as well. I can make it green, for example, or red. I tend to like to make it blue, and I can make it thicker. I pick the medium one here, and that's the 8 moving average. RT is on the graph as part of your default layout, so there you go. Yeah, and Laura's pointing out there was a doji right here on this all-time high, so a little bit of indecision there as well. And I showed the VIX chart earlier where the VIX looks, it is at a resistance area, but it looks poised to go above resistance and hit the next one. So we'll have to see where it goes. All right, and then on the performance graph, I was asked about that. So you would just come in here, stock, and then click on the drop-down menu, come to the performance graph. And so all I did, and I'll go to the layout here, graph layouts. And oh gosh, did I not save it? I did not save it. Oh my goodness me. So with all of the mega trends, let me just go in here. I'm pretty sure I saved it. Oh, maybe not. Okay, so let me just do this. Go to the Viewers tab, Watch List Viewer. Love this new setup here. Thematic ETFs. And these are the February 1 ETFs. And so I'm just going to put in a couple of the top ones here that are at the top of the list based on VST, ARKK. So I made a silly mistake by not saving it. All right, so we just go over here now. I can just right click on this guy, view the stock graph. So it comes up with Clow on the stock graph. I'll go to performance. and it automatically puts in CLOU for me. It's in the ETF sector technology, and I'm just going to remove that. It is underperforming the ETF index, I guess. But then up here, you would just add as many ETFs as you would like, separate them by a comma. I put all of Ed's ETFs into a performance graph, and then you can toggle them on and off. Just hit enter, and so you can toggle them on and off. And so what I did is just, I looked at ARC. Oh, it was way up here, so I kept it in there, and then you've got them all there. So hopefully that's helpful for you. Great comparison. Yep, Robert, QQQ is, you can put that on a stock graph as well. So folks, we've covered a lot of ground. I want to say again, thank you to Ed for an amazing presentation. I think we've all learned so much about thematic ETFs. I've had success with them, particularly Hack has been my go-to in and out. And I think there's others that are just, we just have to keep an eye on those trends for sure. So I hope we've answered most of your questions, maybe not all. I understand that. We can't always cover all the ground we would like. Let me just see if I can find my PowerPoint here. So again, put in all the ones you like. These are the ones that had the best 3 months performance, so I just put them in there and I can graph them, but they all are coming down. All right. And then international numbers are down below here, and in North America, 188-658-7638. So if we didn't get to a question that that's burning with you, just give them a call. Typically, you can get in within 5 minutes or less if things have normalized after the new year, and you should have success there. And then for my email, if you do need the replay of Bob's presentation, or somebody asked for the previous 2 presentations that Ed did for us, then just send me a quick email, stan.heller@vectorvest.ca, and I'll make sure I get that off to you. All right, so we've gone only 40 minutes past time. And we didn't lose very many. People stayed with us, and I really appreciate that. Phil says, thank you. Always a wonderful use of my time. That's great. That's great. Nasky, that would be awesome. It's got some back tests that he's run, so we'd love to see that. And Erwin says, another excellent forum. That's awesome, and appreciate that. Glenn says, I'm ready for another hour. Thank you, Craig, and everyone. Denise, thank you. So thanks, everyone. Have a great rest of your weekend. Spend some time, and you can look at that essay that I wrote again with the idea of looking at 100 of top RS, VST, and CI stocks, graph them, look at those buy ratings on a weekly graph, and I think it's going to be helpful to you going forward as well. All right, so thank you so much, everyone. Have a great rest of your weekend, and good luck next week. Happy trading, and keep your eyes on the Color Guard reports. Thanks, everyone.